Good morning, everybody, and a happy Veterans Day to those folks that served our country. In fact, if you haven't served your country, call someone today and thank them. And I'm going to actually call my father today and my father-in-law, thanking them for their service. And we would not have all these great things in our country. Well, the Republicans don't want you to believe that, but we wouldn't have all these great things without our servicemen and women. Thank you very much. And speaking of Republican debate, it was very interesting. I recorded it last night, stayed up late watching it, and you're starting to see the field separate a little bit. And of course, guys like Chris Christie and Mike Huckabee were in the undercard debate, and I'm sure they shine there. I hadn't seen that one yet. I saw the main debate. But you're starting to see that guys like Donald Trump, whom I like, I'm not sure I would vote for him for president, but I like Donald Trump, and he's not quite there with the issues. If you hear how Marco Rubio answers a question and how Donald Trump and Dr. Carson answer questions, I think they answer them much differently. And of course, the argument can be that, hey, well, Marco is a career politician, Ted Cruz, career politician. But quite frankly, I think I need to have somebody that really knows what's going on in this country and abroad, but that's your decision. But it is very interesting, and we're starting to see some separation. I think that's a good thing, and hopefully after this debate, we'll see some of the candidates drop off, and then we'll have a little bit more of a conglomerate of 5 or 6 candidates that we could really start making decisions on. Anyway, one of the things they did slam was the Fed, and the Fed should be slammed at times. Look, Ben Bernanke, he got us through one of the worst financial crises in the history of this country. And, the question was asked last night and asked several times to, I think it was Ted Cruz and John Kasich, I believe, that would you let a Bank of America, specifically it said Bank of America, fail? The United States is not going to let folks that put their deposits in major money center banks lose their money. That's not going to happen. Will you bail these banks out of their bad investments? No. But that's why that FDIC insurance is there. Okay, so John Kasich did not answer the question that well. He said, well, if you can afford to lose, it's not about that. It doesn't matter whether you can afford to lose your $100,000 you have in a money market at Bank of America or Wells Fargo, or your $500 in a money market. It doesn't matter whether you can afford to lose it or not. You put your money in the bank because you assume that our banking system is safe. Okay, so that being said, if the question was proposed to me, would I let the banks fail? I said there's 2 different things there, 2 different animals. Letting the banks fail with their investments, and they had bad loans out there, and yes, the American dream started with Bill Clinton, where everybody had to own a home. Doesn't matter how much you made, doesn't matter how much you have to put down, but the American dream is to own a home, and that's where all these loans came out with the 0% or zero money down. Of course, rates have been low for a while and actually went lower from there. But the bottom line is the banks, they have now some safeguards. That doesn't say they can never fail again. I'm never say never, because history does repeat itself, and 30, 40 years from now, who knows what can happen. But yes, they could raise the capital requirements on banks and prevent that problem. That's why they do these stress tests on an annual basis. They go through the stress tests and they say, okay, this bank has passed all the stress tests, and they really are very stringent stress tests. So, folks, and I know some of you are the sky is falling type people, the Chicken Little people, that you think that the world is coming to an end and the sun's in your eye, the pebble in your shoe, and the banking system stinks. Well, look, the banking system is not perfect, we know that, but it has been and has been, even with the financial crisis, your money was safe there. Now, that being said, is your money safe in all investments? No. No, especially not the stock market. The stock market is a risk investment. I don't care what stock you invest in. I don't care if it's General Electric, which is still down 50% from its all-time high, or Apple. Doesn't matter. The stock market is a risk investment. However, now I have to shift to another asset class, and I absolutely believe the bond market is a risk investment now. The old allocations of 60-40, 60% stocks, 40% bonds, which would be considered a balanced growth and income type portfolio, I really don't think you can have that any longer. Rates are going higher. There's a possibility the Fed will raise rates in their December meeting. I think we're 5 weeks away from that. I'm not sure they do it in December, but they're certainly setting themselves up that if they do, they've given us the warning. Okay. I think the first rate hike will come beginning of the year at the first Fed meeting of the year, but you still have to take a look at your portfolio and make the adjustments, and you have to hedge against rising interest rates. And your portfolio will include folks, your 401ks. Let us look at your 401ks, and we will take a look at some allocations. If you have long-term bond portfolios in any of your accounts, you're likely going to be buried in these things for quite a while. Doesn't mean you're not going to get paid your interest payment, because that's what a bond does. It pays you an interest payment. They borrowed your money, and they're paying you an interest payment. However, principal can erode based on rates going higher. So that's what you have to look at, okay? Now, one rate hike, I talked about this on Monday, not a big deal. 2 rate hikes, still not a big deal. We're coming from 0. There's an old adage, is 3 steps in a jump. That's 3 rate hikes, and that's when the market's supposed to tank. I think that is old school, and that's when rates may have started moving back up from 2%. We are moving up from 0, so I think we have some room, and it's just a good sign the economy is growing. However, and very legitimately last night, the candidates were saying the slow growth is really abnormal. Normally, on a recovery, especially as bad as our recession was and almost depression, the recovery in this economy at 2% a year is very slow growth. When you see all these tax plans, you really have to get to the numbers of them, and don't inundate yourself with all these different tax plans. Flat tax at 10%, 14%, 16%, the spend tax. We don't know what works yet, but we're certainly going to find out. So my point is, you have to look at your portfolios, take a look at them, see what you have. Look at the asset structure and the asset allocation. How much do you have in the equity markets, the stock market? How much do you have in bonds? Do you have any alternative assets? Alternative assets are a huge part of one's portfolio, and it should be. Okay, you should have 20, potentially even 30%, depending on your risk tolerance, in an alternative asset. So this is something you have to look. And if you're not sure what you're doing and looking at your 401k, your IRA, your individual joint trust accounts, that's what we do. We sit there and we, all day long, we look at portfolios, we analyze them, and we'll do portfolio reviews for you. And we'll do a demographic check, and we'll say, okay, at your age, at your stage in life, when you choose that you want to retire, this is kind of the way you should be. And we'll actually have you take a test. So if you want to take that test, it's no obligation. It's about 10 questions, maybe a little bit more than that. But we can do it on the phone, or we can do it here in person. In the meantime, again, Happy Veterans Day, and I hope veterans are having a fantastic day. They certainly deserve it. I'm Lee Seiler with Seiler Wealth Management. Thanks for joining. Please share my video, like my video. Also, the newsletter is hot off the presses, the digital presses. It's on the website, stockdr.com or Seiler Wealth, 2 names, one location. You can get it hot into your mailbox, but you have to sign up for it on the homepage. Everybody have a fantastic day. I'll see you next week.